And here, of course, is Tom Williams, who I'll be handing you over to. And Rita is here, and I'm Peter. So, Tom.
Yeah, hi everybody. Tom Williams here, speaking to you from Worthing, a little seaside resort town in the south coast of England. It's about 40, 50 miles south of London. And this is where we're based. And Gavin's not here with us today. He's down in what we call the New Forest, which is down near Southampton. Anybody's familiar with the geography of the UK? Anyway, it's nice to be here. Now, the chart. Can they all see the chart, Peter?
Yes, that's the Dow.
Now, this is the Dow Jones daily chart, but it's only up to date to yesterday, right? But what I want Peter to do now is remove these old trend lines. Mine all trend lines are useful. The computer remembers the trend lines for the trend clusters. Now, Peter, draw from there. The market's falling, so first two highs, first low here, that red down bar. That's it. That's it. Now, there's the current intermediate trend line. Okay, so what I like about the daily chart is it gives you an overall picture of roughly where it's going. In other words, which direction it's heading. There's nothing obvious here. There's no massive stopping volume. Look on the lows here. It drifted up because we were over sold originally. It's drifted up. I think we sent a newsletter expected to drift up and possibly hit the underside of the trend line, which I think it pretty closely did. It went up there on no demand. Now, the thing is, you see, the overall market looks weak. Why? Because when you get these wide spreads down on increase in volume, closing, well, near the low, shall we say, that's not stopping volume. Stopping volume may look like that, but you have to have a decline behind you. You have to have something at least like this here, right? This is a sign of weakness because it's pushing down through a previous area of support, which is here, look. Now, I could possibly, I don't know, right. I used to be able to draw a trend line, but I can't now. But widespread down on a slight increase in volume, not massive volume and not low volume. Just the saying is an increase in volume as it rushes towards an area of support and through an area of previous support, which is there. That's normally built-in sign of weakness right there. Although, because we're now at the bottom of the trading range, you might or will possibly expect some sort of bouncing effect. But you've got this weakness hanging over you now. So it's always a good idea. It's only up to date till yesterday. So we'll see what's happened now today. Peter, perhaps an hour chart?
So that's the S&P future.
Right. Okay. Now this is an hour chart. Now I'd like you to ask questions, please, or any sort of questions you want. But this is an hour chart. Right. So we look back here. And this is before the market opened in America, look. There.
Potential stopping volume.
Now, it says potential stopping volume. I know the volume doesn't look all that high because don't forget it's Globex. But it is relatively fairly high to the previous volume. And the thing is, it's down into fresh low ground. Right? The spread isn't all that wide, so there must be support there. But the main thing is, when you get a decline behind you, the market becomes vulnerable to a bouncing effect or other professionals moving in and thinking they can make some money by giving the market a rally. Okay, and so the first sign of that was before the market opened. Now here, this bar, the market did open, I believe.
That's test after shakeout.
Well, there's the signal, buoyancy, a green arrow, look. I always say to Gavin, ignore the signals at your peril. Okay, so please read these dialog boxes. They were carefully rewritten by Philip Friston.
I think Philip's in the room actually, Tom.
Oh, is he? Thank you for that, Philip. If you're in the room, which I believe you are. Good. Okay, so we don't have any secrets. We don't hold secrets back. We don't tell you we have any secrets. As I've said many times before, if you're out there and you come across anything in the market or anybody in the market telling you they have a secret and they want you to pay for it, to go to their seminars to learn all about it, you're being groomed for a con, because there are no secrets in the stock market, because there's too many clever people out there. And I mean really, really clever. Not only are they clever, they're backed by money as well. And don't forget, you see, the balance of supply and demand is tripped by so-called smart money, as Gavin calls it, or professional money. These are traders that trade 4,000-5,000 contracts, and they will join groups, and other groups see them moving, they will join them, and so on and so on. These are the people, or that is the activity that alters the balance of supply and demand, and usually we can detect it. And all these time frames you can check and look at. If one time frame is not looking very interesting, check the other time frames. Okay, so we got two signs of strength here, right slap bang on the bottom. So you could have, no question about it, you could have gone long there, look. And then the trending system hopefully keeps you in the trade as long as possible. Blue, all the time the bars are blue. Once these moves start, professional money need to keep control of the move. So they don't want to lose control. They don't want other professionals panicking and dumping their holdings onto the market. So it's still going up, and you will only sell when a clear indication arrives of weakness. But nice move. Now, what's interesting with this current move we're looking at here is there's not a lot of calls down here. If you follow, what we teach that for a substantial move to happen, right, you have to have a cause. Now, admittedly, there's two bars there which would create a cause, but some of the huge moves, you will see a lot more indications of strength and absorption of supply and all the rest of it there. But even so, those two bars, look, are enough to move that market up, look. And now the only problem at the moment is that there's not a lot of calls there, and we've got this old high here that we have to push through. This old high here will act as resistance, but does seem to want to push up through that. But if it goes up now and no demand anywhere in this area, then you would expect the market to cool off, or certainly move sideways, or no, move down if it's no demand. Okay. Now, are there any questions about this 1 hour chart? There are. Rita says there are.
Alan asks, on this chart, the short term is up. When would one get out as the volume is decreasing? Should one wait for a confirmation, or can one get out immediately?
Well, of course, the answer is that once you learn to read these charts, don't forget, a chart is a language. It's talking to you. It's like Braille. right? And then once you more or less can read the chart, I've got some idea what's going on, look. Okay. Then your skill as a trader has to kick in. Because we can all learn to drive a car when we're young, but some people are better at it than others. So it's your skill as a trader kicks in. We can't tell you precisely what you personally have to do. What we're trying to do is teach you that you can read these charts. And I always say, don't make a trade unless something clear appears, which will warrant your intervention or putting your money in, because it's a very, very dangerous place. As you know, the market is devious, the market's cunning. The market, if you convince the market's going to go up, you can bet your bottom dollar it's going to fall. Now, there are many reasons for that, of course, but it's you as a trader, it's your skill has to come in. I mean, lots of people say, right, I made this, I'm out. And that often works very well. But we can't actually tell you. We don't use mathematical formulas. Well, I certainly don't. And I know top professionals don't. That's for sure. And they don't even use fundamentals. This is how they read the market. This is what they're looking at. The balance of supply and demand. And we can also look at this. It's obviously the market's trying to go up still at the moment. It's gone up through that resistance there. And I'm just trying to look at it better. Right. Of course, now, right, how long has this got to run?
It's got another 15 minutes to go.
Oh, right. Okay, so...
3/4 of the way through.
Yes, okay. Thank you, Peter. So that bar we're looking at, you say 3/4 of the way? Through.
15 minutes to go.
So, but we'll watch that. Because if that volume stays low, that will be no demand. And you'd expect the market to, if the market's really bullish, it'll test. You'll see a test. In other words, somewhere along here, you'll see a down bar. It'll be on a narrow spread. It'll close in the middle probably. The volume will clearly be less than the previous two bars, which relative volume means it's low. And the computer will color it pink for you to remind you of that. I can more or less guarantee if you ever make a trade and it's a losing trade, I guarantee that if you look back, you've misread the chart, because the principles are always right. They have to be, because this is what drives the market, supply and demand. And I'm sorry, that's how it works.
Still on this chart, Tom, Edmund would like to know if the price goes back down to this area, this bar, if the price were to go back down to there on lesser volume, is that a better cause for a larger up move?
No, you're getting your principles twisted. The reason is that the move's taken place. The cause was here, the signals are here, and it's actually moved up. What you're talking about is when you see a sign of strength here, and it may go up one bar and then starts arching over slightly and crawling sideways, and then it goes down and tests. Then you'd expect a big up move. But the move's already taken place, look. So it's not going to fall down, and if it falls down, it's not going to be affected by this volume here. The move's taking place here, and it will keep going up until another principle appears, like supply overcoming of demand, or there's no demand up there, professional money not interested in higher prices. We don't ask too many questions. We don't question the market. We don't query the market in any way. It's no good saying, oh, well, they've gone to lunch. That's why the volume's low. Sorry, Peter said that one day. And we've been repeating that ever since. They've gone to lunch. Well, hang on a minute. Hang on. Don't worry. They haven't gone to lunch.
Gold up, Peter. Gordon's asked to look at gold, so Peter's just putting the daily chart for gold up there. Oh, crikey, it's all over the place.
Yeah,
that's gold, Tom.
GLD, which is a derivative.
You want more bars or whatever?
Well, let me look at this. First time I looked at it. Well, you've got a huge gap down here, look, which, you know, in hindsight, looks like a shakeout, doesn't it? There is an increase in volume. There is a bit of stopping volume there, and that's why it's gone up. But this does not look strong at all, does it? It does not look, to me, strong. It looks fragmented. It looks going up on no demand here, look. This is a shakeout. So the professional money in the moving this gold must be trying to shake people out. This is their ploy to get higher prices, and it works. Shake the market out, and that will allow prices to go up higher. So we just watch this. There is quite a bit of volume here on this up bar. It looks like an attempted test here, and the volume's high, look, fairly high. So it's not a good test. It's not looking good to me at all. It's going up because of this apparent shakeout here. Otherwise, to me, it doesn't look at all strong. It does not look as if that wants to go up. Could we look at a perhaps weekly chart?
Yeah.
I'll just get Peter to put a weekly up so we can see if we can see anything more interesting.
There you go.
Now this is a weekly chart of gold, so we look.
There's no demand.
Yeah, okay, so look, at the top, we do appear to have a distribution cap, look. And why? Because there's an up bar, look. Markets don't like up bars on very high volume, look. And don't forget, it's vulnerable because you've got an up move behind you. You're vulnerable to one or more groups deciding that they may want to unload their holdings bought at lower levels. And look, up bar, very high volume, and bang, nothing. The next bar is up. Look at that narrow spread. Closing off the high. That's distribution without question there, look. And there's what really is an up thrust.
There's no demand.
Well, no demand, right? It's all a sign of weakness, look. That's right, it's gone up, look. Narrow spread. Closing well off the high. It's that narrow spread, look. And you've got weakness here. There's high volume on this up bar. And look at that low volume here. The computer's colored it pink, which I said it will do. Relatively speaking, that is low volume. In other words, professional money at that moment is not interested in high prices. And that's why that whole area is distribution. And that's why it's come off. Those few bars there. Little bit here. Nothing really. It's popped up here. Right. There's nothing clear there that will tell me to buy or to sell short at the moment. But if you're looking at this, that's very clear, especially this bar here, because that is a confirmation of the weakness that you've got behind you. You've got this high volume, look, here. Markets don't like ultra high volume up bars. The very next bar, look, up, narrow spread. The volume is still fairly high. Excuse me. And then up, bang, they mark it up. No demand. Very clearly no demand, look. Look at that pink volume. There's no activity. Narrow spread, up into fresh high ground, which they always do, and that's definitely a distribution area. And that's why it's come off like that. But it's nothing all that obvious at the moment. These markets, don't forget, are devious. So you've got to have literally eyes in the back of your head to, especially with gold, when you've got so many amateurs in there trading this, that professionals love it.
Okay, thank you, Tom. So, any more questions for Tom? Just type them into the questions box.
INTC. What is INTC?
So, Rita, can you read that out and I'll see if I can find it.
Okay, hello, Aaron. Can we look at INTC? Peter's just trying to put that up. Is that a stock?
Well, it is, yeah. So we've got
Yes, Intel.
end of day up to
Intel.
yes.
Intel, yeah. So we've got a daily here chart.
Well, this is reflecting the overall weakness that looks in the daily chart we saw. I mean, strong stocks, you don't get these up thrust like this. These, it's almost like a top reversal look. You've got loads of high activity volume bars, not to mention this in the background, look, on this high volume. That's definitely selling there, look. Here, definitely supply present. Okay, so that's definitely, I would say, this is weak. And all these gap downs like this, that's not, healthy stocks don't do that. This is more or less gap down. When they gap down like that, through these previous areas of support like this area of support, that's not healthy. And this is why the general index that we were looking at looks weak. Put the 15-minute up S&P, see what's happening. We'll just look at the S&P again.
And then we're going to move on to the Aussie dollar.
Oh, we're going to look at the, what's that, 15-minute?
Yeah.
Right, this is the S&P or the Dow?
S&P.
Now, this is the 15-minute chart, look. And that's why I say check these different time frames. There's the signs of strength have come in, look.
Central climactic action.
Yeah, and then here, look.
Bottom reversal.
Bottom reversal, yeah, you see. So all these different time frames, if one chart's not giving you a story that you can read, just turn the page, look at something else. Because you do not trade unless something clear appears. And here you see the market, although it's Globex, so it's not really easy to see the volume activity. But it does vary, the volume. But it's made small because of this when the market, American market opens. Because the computer doesn't know that. It's looking at relative volume. But you've got a decline here, look. And then just like the hour chart we saw, signs of strength has come in. And look, that's a test. There, is that volume low there, Peter?
It's lowish, but it's not particularly low.
No, it's lowish, so I can't see it very well. Thank you. So that's an indication that that market's strong.
That's low.
That's low. And that's why all this market's going up like this. And that's when the American market opened right there.
Yeah.
Okay. And we're probably now. Now, I said to you last week or the week before, one of the strongest buy signals we've got, or most, shall I say, the most reliable, or one of the most reliable, is you see a bull move taking place, right? There's the bull move, right? Lots of blue bars. You'll have one red down bar, but most of blue, and then suddenly a red arrow appears. Now, it doesn't mean to say that that's suddenly, oh, that's definitely wrong, look, right? In the overall analysis that you're taking, because we don't ask too many questions. We don't know why that appeared. It looks like there's no demand. But the rest of the professionals see that, and if the next bar's tested, now a test is a down bar, narrow spread, close in the middle, the volume is less than the previous two bars, that's a strong sign of strength because it's testing that red arrow there. Now, I've said that several times. I don't keep a record of what I say, but I always tend to say the same thing over and over again. And if you remember that, you will certainly will be okay. Not all these red arrows are tested, but that one is, look, and that's why you would tend to ignore that one. And up it goes, look. And but that's the 15-minute chart. Any questions?
Well, Alan wants the Aussie dollar.
Right.
View of the Australian dollar.
Somebody wants to look. What time frame?
Doesn't say. So.
No, which one's the Aussie one?
Eh?
Oh, it's
The future
A.
we got. A.
It's A.
It's at the top there.
Now that's 1 hour.
Ask Alan if he has a particular time frame or daily or something. Could you ask him, Tom?
Right. Is this time frame we want to look at? This is an hour.
Yeah.
Well, whatever it is.
An hour or 15 minutes, he says.
Well, there's some strength came in here. Look, there's two signs of strength appeared. Right. And it looks almost, well, I was going to say like the S&P, but it's a minor version of the S&P, isn't it, where you've got the fall. Once you see these down moves, you're vulnerable to one or more professional operators thinking they can make a bit of money by taking the market up. And that's, we can usually see their intervention into the market. Put a 15-minute up, see, there's not a lot we can read into that. Yeah, well, there's the strength right at the bottom, look. So it's you've got to keep check on these time frames, look. But there's the signs of strength right there.
Potential climactic action.
Oh yeah, well look at that volume. See, the computer's been instructed, right, to once the market's fallen, it's got to fall. You don't get climactic action without a fall behind you. You don't get accumulation without a fall, right? Because the market has to be vulnerable to people panicking, shaking out, and then they can move in. And then when the market's marked down like that, it's in fresh low ground. Sorry, this is updating live. Here it is. Right. It's fallen down, fresh low ground. Okay, and then we get our signs of strength coming in. There's two there actually. And then usually, once the move is underway, you can tell because the professionals don't allow the price to fall below the close of the previous bar. And I know they do that because they don't, the biggest danger is other professionals sitting there with nervous fingers thinking that, right, I better get out of here. They don't want that. and therefore they make sure the move is continuous. So by doing that, you follow it, blue bar, allow for one red down bar, and that's usually on low volume, look, which you did there, look. No selling pressure at all, and it's blue, blue, blue as it goes up, look. And so it's up there, and then it'll keep going until a sign of weakness appears. Now, you do have some weakness at the moment. You have no demand, and that's why it's drifted off, look. Now, the thing is, that's in the background. That won't disappear. Now, we watch this, and if you suddenly see a no demand up bar or an up thrust or something like that, that's weakness, and that means the market's going to fall off. However, if it goes sideways for some time and apparently appears to be ignoring this no demand here, right, and then you see a test. The test is a down bar, narrow spread, close in the middle, volume is clearly less than the previous two, then you would expect higher prices. Now, the word is expect, and we use that word deliberately, expect, because with a test you would expect prices to go up immediately. Now, if they don't go up immediately, then that immediately warns you there's something wrong. Right? If you turn the ignition key on your car, you expect the motor to start straight away. If it doesn't, there's something wrong. Right? And the market's very, very similar, especially when you've got, the reason it's not responding to the test is that it's got all this weakness in the background, if it's genuine weakness. But we, charts are definitely like, it's a language. It's almost like reading Braille. And once you see it, and don't forget all these different time frames, and don't get misled by so many comments from people that don't really know what they're talking about. Don't forget, very few people in the world can do what you can do once you learn this. Very few. And why that is, I don't know. I've got no idea, to be quite honest. But there you are. But it hasn't been around all that long, this.
Question here for you, Peter. You might be able to explain. Last week's recording on the archive. Do you know, can we report on that? Where is it?
Yes, hello there. Who's asked that question?
Edmund.
Edmund. Hello, Edmund. Yes, we've had some problems getting these things onto the VSA Club, the recordings I'm talking about, recordings of the seminar, or at least I have. But I got an email today from TradeGuider explaining the ins and outs of it. So I believe it's, if I try out their instructions, they will work for us, today. So I'm going to put up today's, and then if that works, I should be attempting to put up the ones from the last, I think we missed a couple of weeks. So there were a few technical problems, but hopefully they've now been resolved. So I hope that answers your question.
Yeah. You want to show your Dow trade?
Yeah, we've got a question here from GR. Could we look at SCCO Southern Copper, monthly, weekly and daily? Copper, Southern Copper. And this, is that right, Peter? 20, yeah. This is the monthly chart. Yeah, should we put, do you want less?
Well, it's copper. I've never looked at this chart before, but it's obviously a very liquid chart. In other words, it obviously takes quite a bit of cores to move this chart. But on saying that last top was quite clear. Look here. So it's quite clear, look, up here. So it just shows you. I mean, personally, I'd always rather short the market than go long, but it's easier, to be quite honest. But the market's fallen, look. Right, there's no real indication here of shakeouts or climactic action areas. These bars, look, some of these bars are what we call strong bars. Right, that's why it's drifting sideways, trying to drift up. But this little bit here doesn't look very good, does it? Right at the end here. And this is a weekly chart, you said?
Monthly.
Oh, monthly.
But we can look at, we want to look at the weekly and the daily.
Yeah, right, okay. Well, that doesn't look all that healthy, does it?
Bearing in mind we're only a third into the month, of course. That bar's not complete.
That bar's not complete, yeah. Okay, put a daily up then.
Oh, what happened there?
Yeah, well, something's happened, look.
Do we don't need to reload the data, do we think?
No, it's loaded as you put it.
Okay.
Obviously that's not very good at all, is it?
Well, we've certainly got some weakness right at the top, look. And, of course, markets don't like this very high volume on these up bars, look. Now, don't forget copper is obviously a very, very liquid market. It's going to take several days or efforts for something to happen here. But there's an up bar, look, on very, very high volume. And also note the spread is narrow, which is not healthy. Not healthy at all. Right, so they mark it on up. You actually get a signal here. It's very obvious, no demand. Look at that low volume. And you've got this high volume right behind you, no demand. They whipped around a little bit. And now it's gapped down, probably on some bad news of some sort, look. Right, but that is not a healthy stock to be in. That is definitely not. You don't want to rush out. I would never rush out and be interested in that stock as a long position. It's very liquid. It bounces around. But these tops are readable, look. If you're watching this and you see this, right, you know definitely, and there's even weakness back here, look. This is what we call preliminary weakness. Right, where some sort of weakness has appeared. Don't ask too many questions. There's a down bar there on low volume, allowing the stock to go up, which they do. Don't forget, you've got professional money unloading or want to unload on the next wave up, and that's what they do. Now, that gap down like that, that's because through some bad news, but that is not good news for higher prices.
Okay. Right, Tom's saying put the Dow up. We have to find the day. Well, what do you want to speak, Tom?
Well, now, I've told you about Rita and Peter here that come and help me. Right. They love trading. Now, Rita yesterday made a very good trade. And I've talked about Rita in the past, and I've called her all sorts of names, like housewife or mere woman. Now, I say those words deliberately because I'm having to go with all you men that miss these things. Now, there's Rita here. She's looking after her 3 children, a husband, a house. She cuts the grass. I know she does. She does all that sort of stuff. Paint, and yes, she trades. Now, she made a trade yesterday, and on the Dow, Rita likes to specialize. Now, Rita's going to try to find where it was.
Hello, Tom wanted me just to mention this. Actually, I've had a few trades this week on the very same principle, actually. I can't really elaborate because I can't make things sound complicated, but basically that bar there, that on the 10-minute chart, is a no demand, and I took my 20 pips, which is all I look for in a trade. I like to be out of the market as quickly as I can, and that was it. The market went up at the opening, and I'd been with Tom actually, I think, and we'd looked at it, and it really, there was nothing there that was certain as to what the day was going to do, and but I thought I'll have a look, and it's basically a matter of sitting there and waiting for your bus to arrive, as Tom calls it, waiting for your principal. And when it comes along, the market really does react to it. And I'm glad I got out, because after that it sort of went sideways, and I think further on during the day it did go on down. But if you've got a busy life and you've got things to do, it's best, as I was saying to Tom actually, what I've really noticed is you must focus and you must be prepared to give your time to it. I've had times when I've tried, I know I've got an appointment at a certain time, and so I'll just come along and I'll switch on the computer, and it's not, and thinking that, oh well, if there's something there I can take a trade. It's not quite like that. You really need to spend time preparing, looking at the background, first looking at the daily charts, seeing where you think it's going, what the day is going to do, and that's it. It's focus and attention, and it's straightforward, but it's that being able to wait for the principal, that is probably the hardest thing. Being prepared to wait, being patient and disciplined, and it does work, because funnily enough, my husband, he doesn't sit in the same room as me, but he has his workshop outside of the house, and he came in later and told me he'd made his on exactly that same moment. So we both saw the bus arrive and we both got on it, but we didn't know either was on it. So in fact I had that on election day as well, exactly the same principle, same thing. So there you go. That's it, Tom.
Well, right, well, thank you for that, Rita.
We've got more questions.
Just hang on. Okay, there's some more questions. Now, why did Rita short there? We all see it's no demand, right? But the reason it's no demand is you've got an obvious distribution cap here, look. It's fairly obvious when you look at it, look. There's the first supply here, right? There's your first bounce of selling. What's it say, Pete?
Up thrust.
Well, okay, up thrust. Okay, then it goes sideways. They hold the market up, look, because they want to sell more on every little wave up, right? There's no, make sure, look, there's no selling pressure there, so you can mark it up, look. And there's a very high volume. Markets don't like ultra high volume on up bars. And not only here, right, that's high volume as well, look, it's drifting off. But the reason that's important is this. There's your marker, shall we say, and there it is trying to go up through that marker. And it's not going to go up unless they test it or it gaps up through that at all. And then once it falls off, it confirms that this is all distribution area. And that's why the Dow's fallen off. And that's why, as soon as you see no demand up bars, right, there's one there, look, and there's one, well, a little bit one there, and so on. And you know that because that distribution cap is behind you, that market's going to fall.
We've just noticed actually on the Dow 15. Have you got it? Peter's got 15 on his minute. No, that's 10 minute. It's very clear on the.
Have a look at the.
See if the ES has done the same.
What?
No, the setup's on the Dow 15. Put up. Well, just put one up.
15.
Go. Oh. So up there you go. It's made a move down there because here we've had no demand, and then sort of another no demand, up thrusty sort of confirmation, which made it do that.
Yeah.
Okay, that's okay. So we've got a couple of questions from Jamie about gold. So can you put gold daily back up, Peter? We were looking at this earlier. Oh, daily. Why? What did I do?
Just type in GLD. Or GL.
Did I do that?
GLD.
Oh.
D.
So the D doesn't, you have to press the D.
And then you put the D after that. Hourly. Daily. Is it hourly or
Daily.
daily? So GLD, comma D. Don't stab it, just press that. There you go.
Right. So, right. The first question is, do you think we are seeing a reversal on the gold daily?
Well, I was talking about this gold chart. What? 10 minutes ago?
Jamie logged in late.
Oh, sorry, Jamie. I was going to tell you off for not listening. I apologize. You came in late. No, that's not a bottom reversal. That is a built-in sign of weakness, I would say. And this gold isn't going anywhere unless you see, if it's bullish, you're going to definitely see a test of some sort. But I tend to keep away from gold because there's so many amateurs in there. You don't know whether you're coming or going half the time with it sometimes. But professionals like it because they know they can whipsaw the market on news and one thing or another. But that does not look strong to me at all. And I would not do anything with that unless there's a clear indication of either strength or weakness appeared. But that gap down like that, healthy stocks do not do that. That almost looks like an attempt to shake the market out. It did shake the market out somewhat, and that's why you got a bit of an up move here for several days. But it's not a bottom reversal. Nothing like it. A bottom reversal is when the market's rammed down, widespread down, close on the low. The volume is not excessive, but has increased, right? It's been rammed down into fresh low ground. And then the next bar reverses and immediately goes up, close on the high. And if the close is higher than the high of that first previous down bar, that's a bottom reversal and normally a sign of strength. It's a 2-bar shakeout.
VXX, daily or weekly? Peter, it's a US ETF. Do we have that? For Brian.
Oh, yes, we do.
This is the daily chart.
This is I think it's is it the volatility index?
Is it the volatility index we're asking, Brian? He says it's a US ETF. All right. So, Tom.
I think of the VIX.
Oh, you're thinking of VIX.
Can you trade them?
Yeah.
Yes, ETF. Oh, it's the ETF of the VIX.
Oh, it is then. Right.
Well, I don't know what it is or anything like that, but all I know is that obviously we've got some signs of strength here. It's been whipsawing, look. It's gone up. They've come back down to what was attempted to a 50% retracement. It looks as if it's fallen below the 50% retracement. Right, now it's going up here on very high volume. Markets don't like very high volume. If it is absorption volume, now I use the word if, then the price will hold higher and you will definitely see a test of some sort. Now, absorption volume is when the professionals think they can take the price higher and they're prepared to absorb any selling from this high here. Don't forget that there'll be thousands of traders trading these instruments, and there'll be a lot of traders that have been caught by this down move and they're locked in. And they know, professional money know how the herd behaves. And they know that all those traders be wanting to get out with a profit or certainly not a loss. Now, if that high volume is then prepared to absorb some of that selling, right, then this market you'd expect to test. But that's not apparent at the moment. That could easily be a sign of weakness, especially with all this whipsawing in the background.
SBUX for Starbucks. We can have the weekly, yep, well, the weekly, the daily, or the hourly. It held its high this week, says Starbucks. It held its high this week. So this is the daily chart of Starbucks. SBUX. It's got some weakness.
Well, this is Starbucks. Matter of fact, I like coffee, especially American coffee. It's obviously the stock's acting stronger than the index, look. So that means it's basically a strong stock, right? It's a stock that's strong. However, strong stocks will move in harmony with the index, right? And in this stock, look, you've got that old telltale signs here, look. Ultra high volume on up bar. Now, that'd be some sort of news, but we don't care what the news is. But that could normally be a sign of weakness. And it's that terrific high volume, look, on that up bar that's caused the market to fall, go sideways, not fall. And the market's moved sideways, look. Right. So it's moved sideways. Look, there's the ultra-high volume. There's a sign of weakness there. What's that, Pete?
Potential buying climax.
Yes. Potential. That's, well, it was definitely some selling there, without question, because that's why it moved sideways 1, 2, 3, 4 bars. And so you would not rush in at the moment. If you want to buy something, but it's potentially a good buy because, look, it's acting stronger than the index. And these are sort of stocks you should be interested in. Never buy stock that's acting weaker than the index. It's like if you want to buy a boat and you go down to the harbour, right, and the guy says, well, you see that boat lying on the bottom there that's underwater now, that's cheap. Right, you wouldn't consider that a good buy, would you? You want a boat that's on top floating with the tide and looks healthy. And the same thing with stocks. You do not buy. There's no secrets in the stock market. If a stock is lunging or lying low and not responding very much to the index, there's something wrong fundamentally with that. And so you would bypass that, say, thank you very much. I'm not interested at the moment.
Tom, John is asking if we can compare the ES 1 hour. Hang on. Look at the 1 hour, the 15-minute and 5-minute charts to determine what may be happening. So this is current. 1 hour.
That's the 1 hour.
Hmm.
Well, there's a bit of no demand up there, isn't there?
Okay, hang on. We can look at the 15 and the 5 if you want.
So what time frame is this?
That's the 1 hour.
This is the 1 hour that you looked at before, right? It's hitting, yeah, it's hitting no demand, look, there, which we thought it might do. There's fairly high volume here, right? If that's absorption volume, in other words, there'd be thousands of traders locked in at these old highs, thousands of them. And when the market falls, they don't like that because they're now potential weak holders, and professional money know that. Now, if, and I use the word if deliberately, if it's bullish, they'll test. But that, if it's absorption volume, they'll test. But it doesn't look like, because that's no demand, look, that's normally a sign of weakness. This market, to me, looks weak.
Do you want to look at the 15 and the 5?
Why not? Yeah, come on.
This is a 15. Right, so that's...
15-minute chart. Is that 20 bars up there, Peter?
Yeah, I do.
That's better. Yeah, well, they are, look. There's definitely some weakness there. There's no demand, isn't it, look? 15-minute chart, look. There's the low volume. Coloured pink, less than the previous 2 bars. As it tries to go up, there's a sign of weakness appeared. And the computer has done just what we told it to do. Don't forget, a lot of these signals are 10, even 15 years old. They have not been altered, and they will be working another 15 years or even 100 years' time, because this is how the market works. Works on supply and demand. And when the market goes up like that on no demand, it simply means the professional money is sitting on the sideline. It's not interested in higher prices. And you must have participation of the professional money to that market to stay strong. It's not going to stay strong, right, all the time. They're not interested. And the reason they're not interested, the market's probably basically weak. Well, I'd say it is weak.
We have actually, we're run out of time now. Edmund tells us, do you remember that stock, Tom, SCCO, which had gapped down? That was due to ex-dividend day on November 6. Philip, if you're there, Gordon wants to know if you'll be doing your seminars, because I can't answer that. If you could let us know, do. Shall we look at one? All right, okay. Please ask Gavin. Gavin's the man with the answer there. And what Tom thinks about the moves. I'm trying to read. Right. Okay. Do you understand this question, Peter? From Sorin. What does Tom think about the moves on lower volume, but which make a higher high, a lower low? I assume that's what you mean there. For X is gold and S&P yesterday.
I don't understand the question.
We could. Okay, we're not quite sure what you mean there, Sorin. If you could, if you would like Tom to see a chart, he needs to see something, have a visual.
I tend to be visual.
Yeah. Well, what time is that? Okay. Well, one more question then. Oh, daily chart for gold. We'll put that one up again. This would be our last. We're running out of time now. Okay. So your question, Soren, or the daily chart for S&P. And so what do you mean about what does Tom think about the moves on lower volume, but which make a higher high or a lower low?
It's a question that doesn't relate to VSA as such. It's not specific.
All right. Do you want to?
Yeah, I'm not quite sure what you're getting at there. So your question.
Oh.
Hang on, is that?
Oh no.
That's someone else there. Yeah, it doesn't quite compute in VSA terms. So if you want to reframe that, feel free. And actually, while we're on the subject of VSA, don't forget Tom's book, The Undeclared Secrets That Drive the Stock Market, is a book that I certainly found invaluable to read because it gives you all the basis for everything we're talking about. In other words, it tells you how it is, and it's well worth a read.
So it's saying when it moves up on bearish volume, but continues to move up. So if it continues to move up on low volume, that's what he means.
Oh, I see.
How do you explain that?
Okay, I'll pass you over.
Well, don't forget, you've got professional money hawk-eyed. They're watching the movement of their instrument. And you see it quite often. In a weak market, you see the bar go up on no demand, right? Now, professional money are fully aware of what's happened then, and then the next bar even is up. And that could be up on no demand, or suddenly that next bar could be up on increased volume. Professional money have seen the no demand. They know that everybody else is not really interested in higher prices, and they start shorting or dumping, and that's what causes the increase in volume. But don't read too much into it. If it's going up on no demand, you've got weakness in the background, believe what the chart's telling you. The market's basically weak. Okay, well, thank you very, very much for listening, and I hope you've enjoyed what we've done. And I'll be doing the newsletter this weekend. It's always worth looking at. It's only a chart or two charts, so it's not huge information that you can just tuck away in your mind. And over time, all that information, and it's also good reading the newsletter because it shows you the way my mind is kind of looking at these things, because I just talk what I see and Rita types it out, which is rather nice. People like to read typewritten things very often, and because they can memorize it much, much easier. But thank you very, very, very much. And we thank Rita and Peter for their contribution here. And I look forward to seeing you again.
Welcome to GoToWebinar, Web Events Made Easy.